Hello and welcome to another episode of Market Watch. If you look at the current macroeconomic side of the economy, we have seen some positive trends moving on, especially if you look at the government funding requirement, especially the domestic funding requirement has been relatively eased off. If you look at the interest rate scenario has been gradually coming down. At the same time, the money market liquidity levels gradually building up, and the central banks holding in government treasuries has relatively, or rather, has seen a steep reduction. On the other hand, if you look at the September inflation figures, we have seen a sort of increase from year-on-year basis. At the same time, we are having another 2 weeks' time for the budget 2018. So, in this particular context, we invited today the newly appointed chief economist at Ceylon Chamber of Commerce, Shiran Fernando, to Market Watch. Hi Shiran, and welcome back to the Market Watch.
Pleasure to be back.
Yeah.
Sure.
If I just start our discussion with an understanding about the global context, how the global economy is faring right now, Shiran?
So overall, I would say if you look at the growth scenario, it's definitely doing much better.
Okay.
So even the IMF in their October update in the World Economic Outlook sort of upgraded growth, not by a lot, but there was an upgrade, and even certain countries like China received an upgrade. So what we're seeing is a bit of an uptick in growth, and that's driven basically based on better consumer demand and those kind of factors sort of driving it.
Right.
So that's positive on the growth side. But what we're also seeing is a lot of risk as well. What we've seen so far during the year were risks, but it's not impacting markets like Sri Lanka, emerging markets like Sri Lanka, because we continue to see a lot of portfolio inflows both to the stock exchange as well as the debt market, in particular after March.
Yeah.
But what we're now seeing is certain new risks sort of emerging, and one such risk would be the new appointment of a Fed governor in the United States. So the current term of the present Fed governor is ending, Janet Yellen, and it's uncertain whether President Trump will sort of continue her term, or whether they will look to sort of get in a new person. So the current speculation is between two people at the moment, one who is already in the Fed board and the other who is an outsider. So it depends on who gets picked, and that could have its implications of its own, whether whether the person in the Fed governor will sort of continue the policies of Janet Yellen, which is basically informing the market before things are sort of priced in, and not trying to shock the markets, and sort of guiding the markets towards a rising rate environment, which they have done over the last 2 years, or whether you get a complete outsider who will try to unravel things. So that's a bit of uncertainty at the moment, and it's very important for Sri Lanka, is because, as you mentioned at the start, we've seen a bit of stability, but that stability has been driven by the financial inflows we've seen. So the inflows to the bond market in particular have helped the currency, and also the inflows have also maybe brought down bond rates and things like that. So whether that will continue really would depend on this move as well. So that's a key outlier risk that I would sort of highlight. And if you were to look at the other geopolitical risk also, it's been there throughout the year, North Korea and other risks like that. But whether those will heighten further, or will it just come up as headlines and then sort of subside as the week goes on, or whether they'll continue to intensify is the question. But overall, it's an improving global picture, which augurs well in terms of, in particular, the growth side of it, augurs well for our export and our demand markets.
Right. Shiran, when you come to the commodity price outlook, how does it look like, at this particular context?
So right now, what we're seeing is commodities like oil sort of edging up slowly. We've sort of got used to in the last year or so for it to be less than $50 a barrel if you look at oil. But now it's gone up above $50 a barrel, and it's slowly edging up. And that is more reflective of these geopolitical tensions, sort of the uncertainty being priced in these markets as well. And also the dollar weakening as well. Because the dollar has weakened, particularly in the first 9 months. September it sort of rebounded. And when the dollar does weaken, commodities which are priced in dollars sort of goes up. So that impact was there. But now we're sort of seeing a bit of strength in terms of the dollar. So all those factors have driven commodities. So I think what will continue to drive is will the supply, in particular oil, will the supply glut sort of ease out, or would you continue to see the producers sticking to what they sort of agreed upon?
Right. Shiran, how soon can we expect this particular new appointment in the Fed chief?
I think it's early next year, but
Right,
a decision is supposed to be made in the next few weeks.
Right,
if I'm
fine.
not
Yeah, when it
mistaken.
comes to the domestic environment, we are ahead of the 2018 budget is ahead of us.
Yes.
So how do you look at the situation, and what kind of expectations are there with the budget?
Well, what we've seen is the stage sort of being set with the new Inland Revenue Act.
Okay.
So generally what happens in the budget is a lot of tax changes, in particular on the income side.
Okay.
So to a degree, we've sort of seen the big change already happen with that being sort of brought into fruition. What will probably more likely more interesting would be to see on the expenditure side, whether the government will continue to sort of cut down on public investments, how they'll manage the recurrent expenditure, in particular managing the interest costs,
Yeah.
whether there is actually room to go in for more subsidies and those kind of things. And why I'm saying it's interesting to see is because it's in the backdrop of the IMF program being in play as
Correct.
well, and them also looking at the government to sort of rationalize these expenditures.
Yeah.
So whether they'll stick to it will be the question. And of course, the overall picture of will the fiscal deficit come down, what is their projection, things like that. But overall, in terms of policy changes and things like that, I think the scene has already been set with the Inland Revenue Act. Whether they'll do more wholesale changes remains to be seen at the moment, but they'll need to do a few of it because you need to get more revenue as well. So that probably also will have to be taken into account when it's read out on the 9th of November.
Yeah. When it comes to the government's capital expenditure plans, how do you look at going forward? Because we have seen plans being bit executed if you look at the last 6 months time, but it is not up to the level where we could expect. Definitely now with the new Inland Revenue Act come into the picture, revenue side of the story is bit basically steady up. So how do you look at the capital expenditure side of the story?
Well, I think that has been historically as well as even in the last few years where the government has sort of use that to sort of meet the deficit targets, because you cut down public investments as you go through the year and you'll be able to meet your deficit targets even though you announce a higher deficit target in the budget. Progressively during the year, knowing how your revenue is doing, knowing how much you're spending, you can sort of cut it down. So I think that might continue.
Right.
But it remains to be seen in terms of where the mix is coming from, whether it'll be more towards infrastructure, clearly with the plans of the government in terms of creating like a knowledge hub and things like that. More will go into education and things like that, but more than the quantity, I think it really matters where this money will be spent. So I'd expect more of the same to continue, but more of the same in terms of the trend to continue,
Right.
and not too much of changes from that aspect.
Right. When it comes to the external sector, I saw the central bank release the external sector performances for the first 9 months of the year. I would say first 8 months of the year. So I saw the imports are a bit pressured up,
Yes.
but export has seen a sort of a recovery on the other hand.
So exports have done well. I think
Okay.
it's up close to about 8% for the first 8 months.
Right.
Driven, I think, largely by by our agriculture exports, in particular
Right.
tea. So even though we've had the drought conditions having a big impact on the volume side of things in terms of production, tea prices have risen. So the value side of things have gone up, and that sort of boosted it. Seafood exports have sort of done well after the removal of the ban. August, I think, saw the first signs that maybe regaining GST Plus is having an impact as well. So we saw a bit of a pickup in textile and garments exports as well. So there are good signs on the expenditure side, on the earnings of export side. Import expenditure, as you rightly mentioned, has been up as well. And the pickup has been, I think, driven by the oil prices sort of rising up a bit, and also throughout the year we've had drought conditions. So that has also caused a lot of fuel imports,
Okay.
which has been up. So those sort of, you could say, one-off transitionary type impacts from the drought are having an impact on the trade account. But if you look at it overall in terms of the BOP, it's a 2 billion surplus, which is quite healthy, good buffer, and driven, I think, a lot by financial flows.
Right.
But even FDI has picked up as well.
Okay.
So it's up more than 700 million in the first half,
Right.
compared to what it was under 300 million in the first half last year. So
Right.
the financial account has done really well. So that's why we're having a BOP surplus in that sense.
Right. Any specific sector? You said the FDI is relatively good enough in this particular first 10 months. Any specific sectors you can highlight?
The data hasn't been broken down
Right.
further beyond that.
Okay.
But what we've seen recently is it being driven more on the in terms of inflows to the real estate and
Right.
the construction sector side
Okay,
of things.
okay.
But the hope is once the data does come out, whether it shows that there is more inflows coming into the manufacturing side of things.
Right. Yeah.
So that remains to be seen. But right now there isn't clarity on
Right.
where that is going into right now.
Fine. At the same time, I noticed the reserves position has been quite healthy right now, around 7.7 billion USD right now. At the same time, I think the Hambantota port deal fund, probably I assume it has been
It hasn't
accumulated.
come in as yet.
Right. Okay.
The expectation
So that will be
is
further
that'll further strengthen the
this
position.
thing. So in this particular context, how do you see the currency going forward? Now it has been fairly, moving at a very reasonable level right now. So how do you look at the currency?
Reserves, I think the key point is to build it up based on non-borrowed reserves. So you don't use the ones that you get from sovereign bonds, syndicated loans to build up reserves, which has been the case in the past, and that has been the case even in the recent time where those have been used. So you need the sales from proceeds from things like the Hambantota port and other FDI to sort of prop up reserves, because you won't suddenly see this capital going out, which would be the case in terms of if you see foreign inflows coming into financial instruments. So that has been actually positive for the rupee, and the central bank has also been purchasing dollars in the market more than actually selling dollars. So that has also impacted the reserves going up as well.
Right.
But I think the key in terms of the currency will you continue to see these inflows coming in? Will the central bank still be in a position to actually be buying dollars in the market and sort of letting the market forces decide the currency, or will they sort of be even trying to defend the currency? So right now the indication has been that they will let the market forces sort of determine. And moving into the last few months of the year as well, I think that the current trend would sort of continue for the currency.
Right. And actually, central bank governor recently commented that he doesn't have any intention to increase the interest rates in the probably short to medium term. But if you look at the inflation side of the story, it has been a bit picked up. And again, the central bank's point of view, they are looking at the more interest or rather inflation target monetary policy.
Yes.
So in that context, how do you think, or rather, what would be the situation going forward from a monetary policy point of view?
So when they make these policy decisions, from what I've understood, what the governor has also mentioned in presentations and things like that, is they look at from now what will be the situation in 12 months' time. Because if you do take a policy change of increasing interest rate, that has an impact in terms of the market as well as the economy. And if you raise rates too much, it will stifle lending and things like that, and also growth in the end, which is not doing too well as well. So I think inflation, they're sort of viewing it as very temporary, more driven on the food side and other tax changes and things like that. So if they view it like that and they're comfortable with how it is moving, and it'll come back to say mid-single digit levels, between 5 to 6% or something like that. If they take that view, then I think they should be maybe not taking a view to increase interest rates if they're taking that 12-month forward view. But they will have to be cautious, I think, because inflation's also been up for a significant amount of time, as well as credit growth has been quite robust as well, private sector credit growth. So that hasn't come down as much as I think they would be expecting. Although it's declined to about 18% year on year, still it's taken a while, and that's to do with the lag and things like that. But so I think they'll continue to take a more cautionary approach.
Right. Okay.
Look at the budget. What's the budget doing? Is it going to be a more expansive budget, giving more money to the hands of consumers?
Yeah.
Will that drive spending and demand? So, and that in turn drive inflation. So, I think they'll be viewing these factors before making a policy change. But I'll expect more of the wait and see strategy continuing.
So if I put in this way, that means the medium term interest rate movement, the currency, everything will depend on this particular upcoming budget decisions. At the same time, as you said, the movement from the US Fed side. Is that, am I correct to assume that, Shiran?
Very much so. I think domestically, the policy direction, I think, will be dictated by the budget, because what we've seen in the past is the budget not pushing forward the economy, and a lot of uncertainty created from it.
Right.
So if you do get a much more stable budget, implementable policies, then the business community will have the opportunity to plan ahead and move forward and move in line with what the government is sort of intending. So that'll keep investors in a predictable environment.
Right.
But the external threats are there. I mean, the Fed, political tensions from North Korea, things like that always will be on the cards. And that's something Sri Lanka will always have to navigate even next year. But next year, I think the pressure will be more domestic in terms of the lot of bond maturities coming up.
Right.
So even though there are external debt to sort of service, it's more on the domestic side. So the budget will be very important in that sense.
Right. In a final note, Shiran, in terms of the budget, any specific sector-wise impact that you can, foresee at this particular point?
Nothing specific in terms of that, but I'd expect if there is certainty, because you have the corporate tax and all that certainty from the Inland Revenue Act, no changes on that aspect. But there could be changes in tariff changes and other things, other non-tax changes as well. So those could have wholesale changes. So it's difficult to predict right now. I don't have a crystal ball in front of me to predict right now in terms of the sector impacts. But what's I think important is not looking at the sector specific, but if there's a clear economic positive direction from the budget and that drives the macro, then the sectors itself will take care of itself.
Right. Thank you very much, Shiran, for joining us today. Thank you so much for viewers at home. See you next time with the Market Watch.